gold slammed amid very, very strong risk on being witnessed in the markets. So guys, gold has been getting hit quite hard this week. So on Monday, we were trading roughly 1,750. But today we've gone under the 1,700 mark. So that's about a $50 decline in 1 week, which is quite big moves for gold. Not quite the volatility we saw when the coronavirus pandemic first got started. We were seeing some crazy moves, but quite a lot of volatility in gold compared to the last couple of weeks. So what has been going on? So first of all, there's a couple of reasons really why gold's been hit today. But first of all, like I said in the title, markets are incredibly risk on at the moment. Risk assets in general have been absolutely flying this week, towards the end of last week also, led by European equities, by the way. So why have risk assets been doing so well? Well, I mean, guys, it's a lot of the same themes we've been talking about for a very long time. So what's one of the things? Economic reopening and coronavirus infection rates. So coronavirus infection rates in all the key markets that we track, like the US, EU, UK, they've all been coming down steadily. And despite these infection rates coming down, the economy has becoming more active. So fears of a second wave are diminishing. That is risk asset supportive. Also, there's so much stimulus still from all the major central banks in the world, such as the Fed. That has been keeping risk assets supported. Another big thing, guys, how much have we heard about the US-China trade tensions this week? Not that much, really, to be honest. And markets seem to be taking no news on that front as good news. And there's a couple of other reasons I've listed below as well, such as we've also got the ECB later in the week. They're expected to do a big big increase to the size of their QE program. But those are the reasons why we're risk on. And obviously when markets are risk on, gold, it's a safe haven. So gold generally sells off because gold isn't the only safe haven selling off this week. The dollar's been getting slammed. JPY's been getting slammed. The Swiss franc's been getting slammed. Bond yields have been moving way higher. So bonds have been selling off basically. And there was just two more things I want to talk about. These are more specific as to what happened today. So we've had quite a lot of European and US data today. European data this morning, it was just PMIs and employment data. It was much better than expected. So that's a plus for risk appetite. Then we had ADP national employment out of the US, which is like one of those jobs data that we get before NFP. That was way better than expected. It was expected to be like 9 million people losing their jobs, but it was only 2.76 million, so way better. And then ISM PMI, non-manufacturing PMI out of the US, also better than expected. So that, not good for gold. And then just one final thing, the Bank of Canada scaled back on some of their monetary stimulus. It was actually their repo operations, and gold generally hates it when central banks scale back on stimulus, because gold loves central bank stimulus, right? That is pretty much it from me for now, and I'll see you in the next one.